Again, the S&P 500 has failed at the 3450 to 3460, and you can see that there's rejection and gap down in the morning session. So do watch out in the current market outlook condition in the later part of the video to find out where the market is heading. And also in the trade review section, do pay attention to how to actually profit from this rejection from the resistance zone based on the sign of weakness. Alright, so my name is Ming Jong and welcome to another episode of the daily market analysis for the S&P 500 E-mini futures for the session of 26th of October. So in the video, as usual, I will be covering the market recap from the last session and also the trade review in the 3 minutes time frame, which I will include the entry, the exits, and also the rationale behind. And definitely going forward, I will be covering the current market outlook and also my trading plan for the session later, together with the levels that I'm watching. Alright, so do watch out for that. So let me just get started. Let me get back to the daily time frame and let's talk about last Friday. So as you can see, on last Friday's session was kind of a demand tail shown up and with the slightly decreasing of the supply level. So that is generally healthy, but let me just dive into the hourly time frame and let's extract a lot more detail from last market action. So you can see that again, like I pointed out in the earliest part of the video, I just spotted this 3550 to 3460 again. So we have seen this failure again and again and again. So definitely this is very important level, the resistance zone just keeps showing the strength and we see the rejection from the price action many times already. So definitely there is a trade happening out from this small distribution area, and based on the rejection from the resistance zone, then you can probably profit from this swing down. And also in this morning, the Tokyo session, we have seen a gap down. I think that's responding to the spike of the coronavirus confirmed cases. So definitely there's a lot of the news going on apart from the election, the stimulus package, and we still have the good old coronavirus news. So that will just stir up a lot of the volatility for the market. So let me just get down to maybe 3 minutes time frame and let me review the session. Okay, so as you can see in this 3 minutes chart, so there was quite a few potential trades happening because I wasn't trading, so that's just based on my review. And so first of all, you can see that just prior to the US opening session, so that is the US opening at around 9:30 p.m. my time zone, and prior to that at around 4 p.m. We have seen a good rally up and then followed by a change of character which defines this upsloping trading range. And this upsloping trading range eventually just resolve itself into a distribution range. So prior to that, there's not much going on. We have a bit of the reaction and then another test. But this trading range is right at this resistance level at 3450 to 3460. So this is the resistance zone I have talked many times in my daily market analysis video, and eventually we still wasn't able to overcome this level, and you can see that there's rejection straight out from this level when the US markets open. So that is a weakness, sign of weakness, followed by the inability to rally up, and then eventually we have seen the failure. So subsequently the trading range and eventually the failure straight. Alright, so let me just dive straight to the trade review. So you can see that I have kind of marked it up. So this is how I will be trading. So if I were to trade this sign of weakness, so first of all, this is the clue, the trading range because if you can't form any kind of the bias, it still doesn't matter until this point, because we just want to wait for the market action to tell us what to do rather than just get in early to fear of missing out some trades. So once the price shows its weakness, which is the breakdown and with a kind of high supply level, then followed by this inability to rally up, then you can be sure that the market is going to go down, because that is the weakness itself. So probably I think the first possible entry will be this big bearish bar, because once the market has this sign of weakness, breaking out from this upsloping trading range, or even we want to draw up this kind of the horizontal range, it doesn't really matter. So right after this, we have seen only two bullish bar attempt to rally, but failure at this big bearish bar with the spike of this volume. So that could be an entry. But subsequently, you can see that the market did not really go down immediately. In fact, it had another attempt with this two bullish bar attempt to rally above, but still we have some rejection going on, and eventually we still have a failure again. So this is possible another entry. So it's right at a very similar level, probably 34.50 or 34.49, and subsequently there is some trading range. There's a little trading range going on where the market is just show this kind of the range going nowhere and wasn't able to rally up further, and eventually we have another breakdown and followed by a test and the reversal and then another breakdown. So there are quite a few entries if you actually just miss out these first two entries. So there are some upthrust again, or breakout or reversal. So quite a lot of the entry, and depending how you manage the trade, you probably can ride through this downswing, and maybe you will get stop out somewhere around let's see, if we just base on the swing high and swing low, then I think that will be that's the high, and then we have a lower high throughout until this point. So that will break this high. So it's possibly somewhere around 1 a.m. at my time zone, or if you just based on a very tight stop management, then probably I think the spike of the volume, the climatic action, and then followed by the rally up based on this commitment bar, then that could probably stop you out a bit earlier. So definitely I think this is a good chunk to profit from, and subsequently there is a rally up and to recover all the losses, and just look at where the price stopping. So again, it just stopped at the resistance zone again, so 34.50 to 34.60. So that has proven as a very strong resistance zone between the 34.50 to 60. So in my video on last Friday, I do talk about bullish case and also the bearish case, because for the bullish case to become valid, then definitely the first level that we need to overcome is the 34.50 to 34.60 level. So if we can't overcome this, that means the market is not ready to break out and to start marking up and to challenge the high. So instead, it will just keep going lower to find the support. Alright, so let me just get down to the hourly time frame and let's talk about where the market is heading, because we have just spotted the failure this morning. We have seen the S&P 500 show the rejection at the resistance zone at 34.50 and 34.60 again. So there's a gap down here. So that is the 34.60 to 34.50. So you can see that that's the breaking down. Subsequently retest, showing rejection, another rejection, third rejection, fourth rejection, fifth, 6, 7, 8. So quite a few of the rejection from this level. So again, this is a very good levels to watch, and you can definitely base around the trading plan at this level to see whether there is a short opportunity. And let me just see the overall picture in the 4-hourly time frame. So you can see that I talk about the shortening of the downward thrust. So that's the downward thrust. It's getting shorter and shorter. So that suggests the down momentum could be fading, but definitely we need to see strong commitment above the resistance level at 34.50 to 60 in order for this bullish case to become valid. That's why I keep on saying that this call or this descending wedge or falling wedge could be a bit earlier to call. But anyway, since we just spotted the failure this morning during the Asian session, then I think the market is going lower to at least test the immediate support level at the swing low 3400, which is very important. And subsequently, the immediate support level at around 3380 to 3400, that will form the support area. So definitely this is the first defense level to watch. So if the market can bounce up from here, then I think this kind of the shortening of the thrust, or you call it the descending or falling wedge pattern, could still unfolding at the moment. So there's still a chance for the market to bounce up, but definitely again I need to emphasize the importance of commitment above the resistance zone at 34.50 to 60 and subsequently followed by 3500 level. Then we can switch to the bullish candle. Otherwise, the current pullback or the correction, it's still unfolding at the moment. So only we see that there is a exhaustion of the down momentum, but that doesn't really necessarily mean that the market will bounce up immediately. So definitely we need to look at the telltale signs and look at the change in the market in order to confirm. So right now I think we just need to see how the price will react between the supporting level from 3380 to 3400. So if the level cannot hold, failure again, so definitely we will see it just drift down lower to maybe find a support at 3200 again. So that is definitely the bearish case. So right now this is a very important level to watch, 3380 to 3400 level. If we can see the price bounce up from here, then we still have a chance to see S&P 500 to overcome the 34.50 to 60 level and eventually going to test the all-time high level. Otherwise, if the price fails at this support levels, then it will just going down to test September's low again, 3200. Alright, so that's the immediate levels that I'm watching. So in terms of the trading plan, I'm still looking at the good old 3460 to 3450 level. So that will be the rejection zone. So let's see if the market can rally up and see how it actually react from this resistance zone. Otherwise, the very obvious level, 3400 level, based on the swing low, we just to see if the market can bounce up from here on. And so just pay attention to these key levels and watch out for the reversal signal and also the volume. So let's see if there's a spike of the volume or the exhaustion of the supply, things like that, in order to make a proper trading decision. This is the end of the video. Hope you enjoyed it. If you love to learn how to increase your winning rate in the trading setup, definitely check out the video that's shown on the screen right now. And do remember to subscribe to my channel so that you get more of the quality video like this. Alright, thanks for watching. I will talk to you soon.